Hey everybody, Andy Dautrich with Centennial Lending Group back today to talk a little bit more about Mortgage Coach, total cost analysis, and how we use these tools to help our clients make great decisions regarding secured house debt like first money mortgages and home equity loans. So I wanted to share with you an exercise that I went through with a client recently that was looking to free up some cash, try to alleviate some of the debt, and just create some breathing room. Single parent, fixed income, about 6 years away from retirement. And so what we were able to do is we were able to look at the significant amount of equity that was in the home and try to convert that into an income drip that we could put into a secured account, and that every month we could disperse a certain portion of that to help offset her mortgage payment. And so what we did was we started out with an appraisal to make sure that we had value. And then once we knew we had value, we took out two specific options to show her. And you can see it's a significant amount more than what was owed at the moment. And you can also see that the interest rate is higher, but this interest rate was an adjustable rate and was continuing to rise. And right now she has a payment that's right around $595 a month. And we were looking to move that payment down into the $500 range. So the question becomes, how do we give her a payment of $500 when we know that this larger loan with the higher interest rate is going to require her to pay principal and interest? So what we do is we take an amount of cash out of the equity in the home, which is doing absolutely nothing at the moment except sitting there. We always tell people there's no award and you don't win any kind of contest for having your mortgage paid off, especially if you have debt that needs to be paid. But what we can do is we can look at the amount of equity that she'd like to take out of her home. We can look at the reduction in the payment that we need to make in order to get her to where she needs to be. And we can see that if we drip this amount of money into her liquidatable checking account every month, she's going to be able to sustain that particular payment strategy for the next 5 to 6 years, which is right in line with her goal for how long she'd like to be in the house before she retires. So another great way that Mortgage Coach can help our clients make good decisions is that it makes the unexplainable explainable. And the best way to explain it to someone who hasn't seen Mortgage Coach in action is that it allows you to digest the numbers with your eyes and see things in real time with color, and it allows you to make changes. And so even though it seems weird that you would take equity out of your home to give yourself income, we can go back and look and see what the projected home value might be in the next 5 to 7 years. We can also see how much equity is going to be in the home so that if it's time to sell or refinance again, we're not putting us in a position to fail down the road, just to be successful now or to be able to give you some money that might not make sense. So Mortgage Coach Total Cost Analysis allows us to help our borrowers pass the sniff test, make great decisions. And in this case, this was a huge victory. It creates stability, it creates peace of mind, and it allows us to stabilize that payment that right now is subject to these rising interest rates that the Fed is using to tame inflation. If you have any questions, you can reach out at andyloan.com. Have a great day.